Welcome back, Internet Capitalists, to season 2 of The Big Show. We are rested, relaxed, rejuvenated, well moisturized, and ready to talk to you again about crypto and the larger financial worlds. Benjo, live from Charlotte, how are you doing today?
Pretty good. It's a nice day out. Gonna play some pickleball later, but overall pretty good. And thought just came to my mind. You should have been a TV announcer or something in that industry with that voice of yours.
I
Quite the
appreciate
intro.
that. Thank you.
Yep.
Thank you. I was thinking about that laying in bed this morning. What's my intro going to be? And that's what I came up with. I threw in the well moisturized there as like a little shtick on social culture right now because I thought that was a youthful thing. Isn't that
Yeah.
what the young people say?
Yeah, they do say it. That is one way to go about it. So I like it. But yeah, I guess we've got a docket here. I've got some things that I want to talk about, including Washington D.C. It was Crypto Week, and that was actually an official name for the week, both given by Trump and the House Committee of Financial Services. So very interesting. Two would be the ETH Treasury companies and the overall vibe shift that we've seen there, which is pretty cool, and then also some other things. So does that sound good to you? Do you have anything else you want to dive into?
That's that sounds great to me and Ben. When we did the last episode of season 1, we were in like a bear market or a crappy
Hmm.
market. I think we're in a bull market now. Is this a bull market? Is this what I'm expecting from a crypto bull market or no?
Yeah, I mean, we'll see. It was you experienced the last one was a bull market. We've had like I don't know 6 months of bear market now. I think the previous idea of 4-year cycles in crypto is probably over, and we that essentially established that last time we were talked, and it seems that that's true. So I'd say this is a bull market for sure, and people are expecting higher prices. There's no reason based on macroeconomic factors, based on industry specific factors, based on anything else, why we wouldn't be bullish. So I would say so.
All right, good. And I'm going to have a Tonto's take later that's going to be a little controversial about why we are where we are now, but we
What
can
you can
come to
just give
that
it
later.
now. Now we can do it
Give my
now.
take. I
Yeah.
think, I think, and this is against the thesis of crypto in some ways, but this is being driven by institutions in Wall Street. There's billions and billions and billions and billions and billions and billions of dollars flowing into crypto from not from degens because they don't have that money. It's from traditional finance that sees utility in Bitcoin and more recently Ethereum. Um, I think that's a good thing. That's a good thing for everyone that has crypto. I think it's a good thing for the industry that there's utility instead of it's just something that kids in their basement that live at home use. So all those things are good things.
Yeah, I mean, I agree with you generally. There's a couple ways to look at it, right? I don't think it's against the ethos of crypto at all as it currently stands or as it's been recently. It's against the ethos of maybe Bitcoin, original hardline
Mm.
Bitcoiners who were libertarian types who really wanted it to be an alternative to the US dollar, be used like that. But then there was a newer cohort of Bitcoiners, even like Michael Saylor is one of the paragons of
Mm.
the Bitcoin world these days, and he is far from a libertarian type. He's not libertarian at all. He advocates custodial options for Bitcoin and all of that.
Hmm.
So even Bitcoin itself, which is the most libertarian, isn't really of that nature anymore, and that's just the way crypto's evolved. Although it does have the property of permissionless, immutable, all these other things, which remain even after you put on these other layers on top with the institution. So I think crypto at the base needs that, and that will always be part of it. But a natural evolution of the space has led us to integration with institutions. And I think for Ethereum people, for smart contract platforms in general, and just the vast majority of crypto people, they aren't those hardline libertarian types. No one's really. I think we've expanded past that, and crypto's so big now that it just encapsulates multiple different groups, stakeholders who like the assets, like the technology for different reasons. So,
Gotcha. Now, Ben, on Ethereum, how would you take or rate the sort of shift in the focus of the Ethereum Foundation, not only to be a technical driver, but also to embrace its use cases in the traditional financial world? Because that's one thing that's changed a lot since our last episode.
Yeah, I think it was actually like a community takeover of sorts. I don't know how the Ethereum Foundation has shifted from what I've heard a bit, and they're doing more reach out for these types of use cases, more focused on what people are actually using Ethereum for instead of just abstract technical roadmap updates, which we still need. And I think we're lucky in Ethereum to have Vitalik, have these other really smart researchers. But they did realize that that was lacking. You could say that the vibe shift happened whenever Danny Ryan came back to the Ethereum Foundation. There's that great picture of him working out with like a weight vest, and he's carrying like one of those big things on his shoulders. There's
Yeah.
Giga Chad, high T energy. So I think that's good. But yeah, I don't know. It really seems to me that Ethereum people, the community, not really the foundation, was the catalyst behind this. Like a few months back, and this is what has led to the change. It was people like, I'm forgetting the name now, but a guy who started Etherealize, which had Wall Street connections, and they go and basically pitch ETH on Wall Street. There was guys like Tom Lee, who we can get into with Bitminer, who are on Wall Street on these shows. They have connections with all of these people and are pitching Ethereum in a way that makes sense to Wall
Yep.
Street. And that pivot and not trying to compete with Solana on fast meme coins on the individual user level, but focusing on stablecoins, tokenization, et cetera, and communicating that. People doing that on their own accord and setting up Ethereum community efforts to do that has really been
Yeah.
the key point for me, I think.
Yeah, I agree. I that's kind of what I see. And Danny Ryan now, help me out. He's an OG Ethereum guy that's more of a dude's dude, right?
Yeah, he's been a researcher for a while, as far as I understand. I don't know that much about him, but he's been a researcher for a while. He left the Ethereum Foundation, I believe, because of differences in vision for where it was going, or at least what they were focusing on at the foundation. And then he came back. But yeah, he looks like a Chad. He's a really smart guy, and I think him being back was the key indication that that vibe shift, or at least a broader perspective from the Ethereum Foundation and the community was occurring rather than what had been occurring previously.
Nice, love it. I mean, personally, I like what I'm seeing. I've always liked Ethereum. Um, really good stuff. So Ben, let's jump into your agenda now. What was the first item on
Yeah,
your list?
yeah, it was Crypto Week in DC. So the House Committee on Financial Services, in collaboration with the House Committee on Agriculture and House Leadership, actually designated the week Crypto Week in Washington. The week starting July 14th, which was this past week. We're recording this on Saturday. But essentially, the whole idea was to push legislation forward regarding crypto. And there were three primary bills or acts, and the one was the Clarity Act, the one was the Anti-CBDC Act, and the last was the Genius Act. And the Genius Act was actually signed into law by Trump on Friday after passing the House and a vote with bipartisan support, very strong support from Democrats, which was good. And essentially, I'll just break the bills down and we can talk about them a bit. But the
Yeah,
Genius Act signed by Trump into law. That's stablecoin focused. And essentially, it was passed in June by the Senate, I believe, and then it went to the House and just passed now. And it sets up the first federal framework for regulating stablecoins. It focuses on issuer rules for banks, consumer protections, and things like this. And it really allows big institutions to fully get into the stablecoin game without worrying about whether what they're doing is legal or illegal. So that's very good. And
yeah,
I just know for a fact that banks are actually talking about this. So that's pretty cool. The next one would be the Clarity Act, which passed in the House today and it heads to the Senate next. But essentially, not today, it passed in the House this week and moves to the Senate. But it essentially helps delineate the jurisdiction between the CFTC and the SEC in regulating crypto assets. And this is super good. I believe what it does is has a test that's not the Howey test, the 100-year-old test they're trying to apply to crypto
yeah,
assets. To designate who regulates them. And we can talk about the distinction between which entity should regulate different crypto assets. And I think we kind of established that in the past, but that's going to be passed hopefully relatively soon. And that's very good. And then the last one is Anti-CBDC Act. Full name is the CBDC Anti-Surveillance Act, I believe, but it blocks the Fed from launching a CBDC without approval from Congress. So that also passed in the House and moves to the Senate as well. So overall, this sets up like a bunch of rules. This was very good, and my key takeaway was that there was bipartisan support, and lawmakers are actually starting to understand what the space needs. In my opinion, that's what I'm saying. So I think it's huge.
Yeah, the Anti-CBDC Surveillance Act actually was tagged on to the Annual Defense Authorization Act,
Mm,
which more or less means it's guaranteed to pass. Because I don't know
nice.
the last we've passed the Defense Authorization Act every year.
Yeah.
Um, so Ben, on that note, when all this was going down, I asked my friend Chet, the Chat GPT guy, tell me why Elizabeth Warren hates all this stuff. And basically, I expanded that, or it expanded it to give me the comparison between Elizabeth Warren's position, Senator Loomis's position. Cynthia Loomis, is that her first name? And
Hmm.
then is it Tom Emmer's
Emmer,
position?
yeah.
Emmer, yeah. And what I found was, all right, she comes across pretty negative, but the most negative thing I had is actually her policy issue, which is she wants, I think, for her own good reason, which is safety, which I'm going to assume she believes, she wants crypto to be governed by the old financial system rules, the old banking rules, like to a T. And I don't think that's practical. I think there needs to be some modifications of those things to let this take hold, let it flourish, let it be as good as it can possibly be. On the other hand, Emmer, who I actually like listening to him talk, he's a very much a Wild West guy, let everything go. The key here is Lummis. Lummis has very good central takes on what do I want to say? Uh, Fostering innovation within a sandbox. I think she would admit the sandbox isn't perfect, but now we have a sandbox of rules and regulations and guidelines that crypto can now operate in, which I think is key. And the thing that I mean, I had no idea because I think she's my age or older. She's like an OG Bitcoiner, like not
Hmm.
quite 2010, but 2013 is when she bought her first Bitcoin. So, okay, people say that could be self serving, blah, blah, blah. But let's face it, in 2013, you had to have some appetite for innovation and risk to buy a Bitcoin for, I don't know what it was then, a few cents, a few dollars. So, anyway, I like it that there's all these people now that have nuanced takes in Congress that can lead us forward. And I think these bills are the first step. Perfect? No. Better than it was? Yes.
Yeah, no, 100%. It's much better than it was. I'm just happy that we don't have to focus on this stuff as much anymore, just because like the regulations are getting in there. And I think
Yep.
any reasonable person who looks at the space doesn't say like, yeah, just let anyone issue an asset and just give it to everyone in any brokerage account because they're just going to get scammed and get ragged. No one says that. And the
Yeah.
whole key here was to both allow people to have their freedoms to develop these technologies, interact with the technologies as they see fit, while having some reasonable consumer protections for your average person. And that's just not what was happening at all the last 4 years. We just had an administration and those Democrats, and I think a lot of the Democratic Party, as we have seen in the House with these bipartisan support of the bills, is shifting. But this old administration, these old Democrats who really had taken hold the last few years, were just completely corrupt. It was just like it wasn't even reasonable. It wasn't even relatively reasonable. They were coming after people for developing the technology, for trying to offer completely legitimate DeFi products, for example, to people, and they would try to throw them in jail. They would fine them. They would repeatedly fine Coinbase. They would not communicate with you, and that was the big issue. It wasn't even about like specific policies. In my opinion, it was straight up corruption because of vested interests and connections with Wall Street, connections with banks, connections with legacy institutions, and the other interests they had. And they had no potential upside in doing this, and it wasn't an honest effort to try to regulate it. I don't think any of the views from the past administration were actually genuine at all as it relates to crypto,
Hmm.
even a little bit. And now we actually have an administration in there who is supportive of it. And I actually think Trump, to be clear, my view on Trump and the whole family is like kind of they went too far the other way a little bit. Like I don't love all the meme coin stuff they did. They're kind of like it's all over the place. They are benefiting quite a lot from it, and you can argue about like the morality of that. But that has shifted the complete negative end of Wall Street. It's shifted everyone to the middle now, and we can reasonably talk about it. So that's what I'm
Yeah.
happy about.
Yeah. I'm not a fan of him for a lot of reasons. And I think he's made a ton of mistakes, but it's amazing how this crypto stuff, independent of his family ties, these rules and regulations
Mhm.
seem like a good thing for everybody. And
Yeah.
I don't know if it was the Genius or Clarity Act. It was something like 60% of Congress, like a bunch of Democrats, voted for it because they saw it was a good thing. So I think that's awesome.
Yeah, I think a lot of education has been done through Coinbase, through other entities to really just educate people. And it's like,
Yep.
it was hard because the entire media, essentially, which is aligned with the Democrats generally and more liberal viewpoints, just adopted the viewpoint of their party and just had a lot of assault against crypto. And they just don't like tech people in general because they're just kind of diametrically opposed. Tech people do things, break the rules, make a lot of money, and they write on them. So it's like a whole thing. But they were just straight up lying and just communicating to people for 10, 15 years, either lying or they didn't understand it about what crypto is, which was just not accurate. And now we have enough education, enough resources to go in there and be like, hey, this can actually be used for good. Here's the good parts. And I think we've also done a good job at like explaining that there are bad actors in the space. These are the bad actors. These are the things that need to be fixed. We understand that. And the reputation of crypto being an anti-establishment, not wanting to be regulated, that's what you always heard, not wanting to be regulated, which wasn't true at
Yeah.
all, has gone out the window. And that's a great job from Coinbase, from all the other lobbyists in Washington. And so kudos to them. And I think they really were a big part of getting us here.
Yeah, I agree, 100%. And I'm going to trash these folks a little later, but I think XRP and Ripple did a good job lobbying too. I think it was more self-serving than Coinbase. They
Yeah.
certainly spent a lot of money moving all this forward.
Yeah, it's a good point. They did do that, so I think that could be a positive legacy that they have. And who knows,
Yeah,
maybe like they're definitely making a couple of Uber drivers rich as well.
yeah, yeah.
um,
Well, I have a story about that. Eli's PT guy, huge XRP fan.
oh,
He said to me, "Go ahead."
no, I was gonna say, tell everyone why I think that everyone loves XRP. I saw a tweet about this. Was my idea, but I think it's because it's a top crypto asset. It's like top five in market cap. So you go to cryptos, it's top of the list on whatever list you look at. You get at Bitcoin, it's at like 120,000. They're like, how am I going to get rich off that? It's 120,000. I can't buy a Bitcoin. And then it's like Ethereum, it's still pretty expensive. It's like, and then XRP is like $3. And then like, if it goes the
Yeah.
price of Bitcoin, I'm rich. So I think it's a combination of
Yes,
those two things mostly.
it's the price of a candy bar.
Yeah,
One
yeah.
XRP thingy,
The
price of a candy bar.
the unit bias is like gets people. I think.
Exactly,
Yeah,
exactly, exactly. All right, continue forward.
yeah.
You want to
So
talk about?
yeah, we're done with Washington. Happy to not be talking about that, but overall, very good picture. We're in a great spot. I think we can kind of take our eyes off of that and now move into a lot is going on Wall Street. So because of this
Yes,
regulation coming through, we're getting in Bitcoin success over the last few years. We're getting a lot of interest from Wall Street now, particularly with Ethereum, and it's going to get super interesting in my opinion. So basically, what's happening is the crypto treasury companies, and
mm-hmm.
this kind of ties closely to the E5 shift. But I'll just give like a general overview.
Yeah,
So
go.
crypto treasury companies are heating up. So public companies are stacking crypto coins, particularly ETH is a big one right now, just like Michael Saylor did with MicroStrategy, which is now Strategy starting 4 or 5 years ago, whenever he started. So it started ramping up like a few months ago when a variety of firms began raising capital via stock sales, debt issuance, etc., to buy ETH primarily, add it to their balance sheet, and then presumably do what Michael Saylor did and just keep doing that over and over again. But the interesting thing here is that ETH is a productive asset, unlike Bitcoin. So there's a lot of talk about these publicly traded companies using their ETH treasuries to engage in DeFi to get extra yield on it. Because if you can Bitcoin, you don't get yield on it. So you can hold on your treasury as long as it goes up, it works. But it's a bit different with ETH and other productive assets because they can use it in DeFi, get extra yield, which increases returns for stockholders, increases the net asset value of the company. And it's just interesting for the Ethereum space because we're going to have publicly traded companies potentially using DeFi. So that's super interesting. So um, the key players here, one would be Ethereum co-founder Joe Lubin in Consensus. So I think he spent 400, $500 million to get a controlling stake of SharpLink Gaming, which is SBET, and he became its chairman and then turned it essentially into an Ethereum treasury company. So they're acquiring large amounts of ETH, and then that was followed up by a variety of people. The second most notable of which is Tom Lee. So he's a founder of a hedge fund, I believe. He's a established Wall Street guy who's been there for a while. But he took a controlling stake of Bitminer Emerging Technologies, or Bitmine Emerging Technologies, and they were a former Bitcoin miner, actually, and this is a common trend. There's other Bitcoin miners doing this that pivoted also to an ETH Treasury company. And interesting thing about that is that Peter Thiel actually bought 5 million shares, which is about a 10% stake in Tom Lee's Bitmine company, which is super interesting. So you have Peter Thiel, you have Tom Lee, you have Joe Lubin, all starting off this trend. And now this has kind of potentially set off Wall Street craze with ETH instead of Bitcoin, because they all saw what Bitcoin was doing and what Michael Saylor was doing with Bitcoin, and they see the opportunity for ETH. And it's much more interesting, in my opinion, than Bitcoin. So any initial thoughts on all of that that's going on? One last thing, too. Tom Lee has stated that he wants to acquire 5% of Ethereum's total supply,
Yeah.
which is crazy. But yeah, that's what's going on.
All right. So, yeah, some comments on that. This is going to be a long story, but I'll eventually get to the point. So, first off, since last time, I've more or less divested myself of all minor tokens, and the only, besides ETH and Bitcoin, the only tokens I hold now are, I would say, a small stake of locked up Aerodrome and a medium to large size stake of Lido LDO. Also, I'm a Vanguard guy, and as many of you know, Vanguard doesn't offer direct access to Ethereum or the ETFs or Bitcoin. So I actually have a medium to large size position in SBET. So I've followed them more closely. And at first, it was just a surrogate for Ethereum. It was easy for me to do. I don't have to wire money all over the place. I can just buy it, and I have exposure to Ethereum, which is what I wanted. I followed them. It looks like, and it's in the early stages, is definitely the same kind of Ethereum beta that strategy is to Bitcoin, which is sort of interesting. It seems like there's insatiable demand right now. SBET this week changed I think it's their at the market program, ATM program, from 1 billion to 6 billion, 5 billion more, where they basically sell shares at market price and they buy Ethereum with that. So it seems like that's going to go like gangbusters. And also, I follow Tom Lee and Joe Lubin and SBET on crypto Twitter, and it's weird that these founders are supporting each other's goals. And I'm like, well, why the heck are they doing this? They're competitors. Well, they're really not. It seems like as each buys things up, that's gonna help each company in general, and they're going to differentiate their organizations on innovation. And you mentioned this, Ethereum Treasury companies in DeFi is one of those potential innovations. So a big difference between Ethereum Treasury companies and Bitcoin Treasury companies. One is simple. These companies generally, at least SBET, is staking nearly all of their ETH and getting 2 or 3%. But the second area is the ability to use that Ethereum productively in DeFi. Now, I don't think they're going to go to some small rando L2, but that money's going to make its way back in the system, I think. And the thing that I want to ask you, because I'm a little confused about it, where do they deploy $1 billion of ETH, of staked ETH?
It's Ethereum L1 is the only place you can do that.
Okay.
Yeah, you can't.
Okay.
There's not even relatively enough liquidity. You could bridge it via the primary bridging contract each L2, but within the markets in the DeFi protocols on those L2s, there's nothing you could do. You dilute the entire pools. You wouldn't be getting any yield. Nothing would happen really. So it'd be Ethereum
Gotcha.
L1 and via the staking mechanisms. But again, the DeFi stuff is very interesting to me because you could see them depositing a reasonable amount to Aave, because generally speaking, Aave ETH doesn't get necessarily a higher yield than staking, but you could use it as collateral and you can get liquidity on your ETH and Aave. And there's a lot of really interesting things where these treasury companies could get levered up and they could do a lot of really cool things. So at this point, the main thing that sticks out to me is that you have these weird operations now that are that could be a combination, and kind of are at this point, a publicly traded company with a balance sheet with a variety of real world assets, including US dollars in bank accounts, treasuries, I'm sure, crypto assets, then they have stock that in debt that they can issue to raise money. They can raise money via decentralized rails by depositing their tokens to Aave and getting instant liquidity in the form of USDC. And then that USDC is
Mm.
currently being integrated into the banking system. So like the how close the traditional system is getting to crypto and how tightly linked they are, and the ability to move money at a large scale between the two systems, it's really coming together. And like this happening via the treasury companies and via stablecoin legislation and banks getting into it is a big deal. And I think this is going to yield the most interesting results. And I'm sure at some point, I would not be surprised if one of these treasury companies, a few of them, are going to, I'm not saying the big ones, but are going to blow up. You can definitely mismanage these things, and people who try to get into the game after they see Tom Lee doing it, after they see others doing it, thinking that they want to get into space, might be the next 3 Arrows Capital, mismanage their treasury, try to juice their yields via this combination of stock issuance, traditional debt, and then also on-chain debt. So it could get really interesting. And yeah, I'm just watching to see what happens.
So Ben, one thing that you brought up that is, I think, easy to do and one of the least risky things in DeFi, and I say least risky. I don't know what that absolute risk is, but least risky is you deposit your staked ETH, you borrow ETH, you stake it and deposit that, and you lever up on the core yield of Ethereum, right? Isn't that a very basic thing to do?
Yeah, you could, and you could do all of that. So I think we're going to see various different strategies occur with that. And there's so many yield opportunities in crypto now that it could be really interesting. There's also,
Yeah.
you could also take out USD denominated loans and USDC, for example, and your borrow rate fluctuates based on obvious supply and
Yeah.
demand. But there are some risks you can take. Like if you deposit USDC to synthetic stablecoin protocols like Athena, your yields are generally going to be greater than your borrow rate on the
Mm.
USDC. And if you're doing that in size, you could capture a pretty large basis between those trades. So like you are taking additional risk, but there's a lot of things you could do. And there's like varying levels of risk. So I'm sure there's going to be some treasury company who is like the degen treasury company. They say they're going
Yeah.
to raise a bunch of money, get a bunch of ETH, and then you basically through the stock have super levered exposure to ETH because they're already levered via their stock sales and their debt, and then also via their on-chain actions. So one of these things will definitely explode, but I think it's going to be interesting to watch.
So Ben, isn't though like Three Arrows Capital, for example, there was no oversight, there was no visibility, no transparency. At least with these publicly traded companies, if the founders don't want to go to jail, they have to at least be a modicum of transparency on what they're doing with the money. Is that a
Yeah,
fair statement?
Yeah, but 3AC necessarily they were a hedge fund, so it's like if you're a publicly traded company, it's different because you have public shareholders. So it's like it's good that you have that, but it's like
Yeah.
3AC. It was just a different situation, is my point, I guess, because they were
Yeah.
taking very crazy risks, but it was a hedge fund. So I'm saying that it's possible that this type of stuff could happen within a publicly traded company.
Yeah.
So there will be more oversight, seemingly, but where the boundary is somewhat unclear, and just in the current regulatory environment, I think people will try to push the boundary, at least someone. So yeah, we'll see.
So another thing that I want to comment on about this discussion we've just had, you've mentioned Joe Lubin, who's founder of Ethereum. Tom Lee actually was Compound. He was one of the founders of Compound, right? Different
No,
one.
Robert Leshner. That was another thing that Robert Leshner, founder of
Okay,
Compound Finance and L1, tried to take over like a publicly traded failing liquor company, YHC. He announced that he was going to take a controlling
that's right.
stake. Then he got diluted and went back. And people like I know Steven, who we talked to on one of our last
Yeah.
episodes. He pulled like a 70x on YHC stock and then wrote it all the way back down because he announced like a day later that he wasn't going to proceed because he was getting diluted and pushed out.
Uh,
So yeah,
gotcha. My point was though that we're talking Aave, we're talking Athena, we're talking um, the big players in the industry, the well-known established players. Um, it would seem on the surface they're going to benefit from this, and the little guys, the startups, all the base ecosystem L2s, whatever is going to be an issue. But what you just said is there's an opportunity now through these treasury companies to have like very large size investment into promising smaller crypto assets. That's if that's part of their stated, if that's part of the treasury company's stated income plan, yield plan. They could go, like you said, true DJing on something really small and take risks like that. Which to me, when I tried to do that, I got screwed and lost money and got money stolen and all that all the time. I would kind of, for a small portion like that, for me personally, to have access to those deals without having to monitor the discords and do all this other jazz just to make sure things are going smoothly. Does that make sense?
Yeah, I mean, I think it's like a question of like why would a publicly traded company like want to add other tokens to their treasury? If it's like a diversification, like it could happen for sure. Like if they could start building up like a very robust treasury and maybe they have some other business operations as well, then they might have like a venture portion of their treasury where they just
Yeah.
invest on chain. Um, at the moment, I don't see like a reason why any of them would do that. I think it's more likely that they just use base ETH and stablecoins and DeFi is the first thing you're going to see, but it could happen for sure. And I think the more likely thing that you see is a lot of these companies will potentially, it depends if they have a product. If they have an external product besides being a treasury company, which some undoubtedly will have, then maybe they'll have an L2 and there will be some interesting things happening there, their own L2. But yeah, I mean, it's possible. I wouldn't expect to see that soon, but it's possible.
Gotcha. Another thing I'm thinking of here, like these Ethereum treasury companies could essentially be liquidity sources that do private placement deals of USDC or USDT or whatever to private parties to fund their operations. I don't know. What I'm thinking is, what if Visa needs, I don't want to say emergency, but needs $2 billion of USDC right now? These treasury companies could have that on their balance sheet and could provide that as like short-term working capital loans to these other big companies. Things like that. Does that make any sense?
Yeah, it does make sense. It's a question. Yeah, I mean, I'm sure that would happen. That's more of like an OTC kind of deal thing,
Yeah.
and with the
Yeah.
liquidity that they have, they could do that. And again, I think you're just pointing out the general through line here, without going into each scenario, is just that there's a lot of new interesting things that could happen. One, because publicly traded companies own tokens and can do things on chain, and because stablecoins are actually going to be within a regulatory framework. So those two things together are just like the main through line to me and are going to yield some interesting results. So we could think of a bunch of things that are going to happen, and I'm sure they will happen, but very interesting for sure. And this is definitely a big thing. And I think we're just in the early innings of seeing what's going to happen.
Yeah.
Because like, let's just, Saylor had the idea with Bitcoin and it's smart, but like once you add asset with a multi-billion-dollar ecosystem of financial rails, which are payments, which are lending markets, which are exchanges, all on chain, and you connect that to the traditional system, it just gets super crazy. And we're at that point, I think.
Yep. Yeah, it seems like Saylor came up with the idea of a publicly company to hold crypto is the way that you basically back the dump truck of money up legally and pour traditional financial assets into crypto. And he was limited because it was Bitcoin. The Ethereum companies have some more options they'll build on that, which is really cool to see.
Yeah, I think it'll be interesting. So we'll see, and hopefully, there's probably going to be companies like these banks who issue stable coins. JP Morgan has their own, which is a little bit different from like a permissionless public stablecoin. But they are probably going to start buying ETH for their own treasury. They're on chain anyways. The banks are going to be on chain. They're probably going to want some ETH. They're going to need some ETH to pay gas anyways. So like, might as well add it to your treasury. So that's another
Yeah.
thing to watch.
So is it fair to say that ETH is like the global reserve currency of crypto? It's like
Yeah,
the dollar of the crypto world.
yeah, I think so. It's the global reserve asset, at least of like the Ethereum ecosystem for sure. And if you're betting that the Ethereum ecosystem is going to be like the crypto network that wins, then ETH is the money. And it's pretty clear at this point that ETH's gonna win. Like I don't like the whole thing with Solana and these other chains being fast and that was good whenever the primary users were individuals just gambling on chain, and that's great. Like
Yeah.
that's bootstrapped us that's gotten us here. But I think people just really doubted that we would ever see the confluence of crypto with the traditional system just because it seemed so out there. It didn't seem likely, like it wasn't going to happen. It's basically here. Like it's a done deal. We don't even have to worry about it. So like who wins? It's pretty obviously Ethereum. It's only a mature enough network to do it. It's only big enough asset that's programmable to do that. So I
Yeah.
don't see how at this point it's in doubt anymore. That's why I'm so bullish on ETH again. Because
Yeah.
like the whole thesis is playing out. This was always the thesis in my mind for ETH, and it seems to be happening.
So, Ben, full circle, and you brought something up about smart contracts, and going back to when you said somebody's going to blow up. Um, a beauty, at least in a first principle sense of DeFi, is that the smart contracts try to auto deleverage when ratios get off without a human having to make decisions. Um, if you'd have a DPEG, Aave would start liquidating assets to keep the entire pool afloat. I guess there's probably edge cases and ways to get around that, but in the most basic sense, we shouldn't have to worry about losing money in that respect. There's lots of other ways to lose money, but the smart contract itself should preserve the equity or preserve the capital as long as it's set up correctly. Is that a fair statement?
Yeah, I mean, the smart, like, you can make a wrong financial decision to get levered and pick the wrong direction and then get liquidated. But in terms of the smart contracts working as programmed, these have been around for many years now. Like, the Aave smart contracts survive in all the lending markets, survived 2022 and the huge downturn
Yep.
after FTX, 3AC, all of that. And they've worked as they should have many times with large amounts of capital. So I think we're at the point there where they're mature enough. Of course, if there's a new smart contract out there, they're always at risk of exploit for sure. But the mechanisms themselves, DeFi's been around for a while now. Like, DeFi's been around 4 or 5 years, a little more than that, and it works. It just works, which is pretty crazy every time I think about it.
Yeah.
That these systems that operate essentially on their own just can serve as financial services, but it works. So yeah.
That's awesome. All right. Ben, what was next on your list? I have one thing that I did want to talk about a little bit whenever you're finished.
Just the last thing, we haven't talked about prices, so we'll just like give everyone an update where
Oh,
we're
yeah.
at. Bitcoin, everything's basically not everything, but Bitcoin is at an all-time high. Everything's up basically. Bitcoin just hit an all-time high of about 123,000, and then stuck around 120, which is where it is now this week. And then the ETH really started heating up this week. ETH went from opened the week at about 3,000, maybe 2,900, after going up from like 2,300 to 3,000 in like the few weeks prior. And then this week it went from 3,000 to like 3,700 at the top, and now it's like around 3,500 or something. So all the attention really has shifted to ETH because of the treasury companies. Bitcoin's still holding strong. People are very bullish, and people are speculating that because of this environment, because of ETH's outperformance, you could see altcoins generally rise. And you can pick your bets there, but people are anticipating this to be a large bull market. There are whispers of people, not even whispers, but people thinking that this is going to be as big or bigger than 2021, and people are really underestimating it. So we'll see, but that's where the market is, super bullish. I think that's all. Oh, well, the last thing I wanted to mention, and then you can go forward with what you want to say, unless you have comments on mine. But Coinbase did launch a revamped version of Coinbase Wallet, which they're calling the Base App, and it basically integrates social media, trading, payments, mini apps, etc., in an app that all operates on the Base L2 network, and it's meant to be an everything app for crypto. And the one cool thing that I saw is that basically every post that you make on the social media aspect of it launches with a coin, and that you can like invest in a post from the beginning. And if you put like $100 in it and people start buying the post as well because it's going viral or whatnot, then you can make money off of it. And that's the best model for that I've seen so far, because people always say on like Twitter, they're like first like, first comment, like whatever, no one cares. But if people start putting down like $1 on a post and then like goes viral and they make like 200, I can see that being something that like normal people really like. So if they can get it out there and have good distribution, then I think it could be interesting. But I haven't tried it yet, so I'll let you know what I do.
That's a really cool idea. That's awesome.
Yeah.
Very good stuff. Um, let's see. Last thing I wanted to talk about, and I'm going to give credit to a guy named Mike Alfred. I don't know if you follow him on Twitter. He seems like a reasonably credible guy, big follower. I've always been interested in infrastructure plays. I think that in the early days of the internet, the infrastructure plays like Cisco and EMC and those sort of companies really did well. And I was looking for the same sort of thing, essentially with mining companies. And following him, he's big into Cypher, CIFR, and Iron, which are two Bitcoin miners. And I did a little research into that. And one of the things I'm noticing about these miners is they're investing just a ton of money in two things: in upgrading compute and securing power. Um, but the one thing that really was the final straw for me to invest in ETF of miners is their crossover into AI. It seems like many of them are using, or some of them are using their skills, expertise, trade secret domain knowledge in building data centers to also build up large AI clusters. Now, the bet is going to be, is there going to be a need for outsourced compute? ChatGPT, Grok, those sorts of things have their data centers either internally or they're with the big players. Will normal companies want to outsource their LLMs to these sort of miners that have this compute? I think there's a chance there. And one of my very small investments is in the WGMI. We're going to make it ETF called, I think it's Valkyrie CoinShares Bitcoin Mining ETF. And that's something that I kind of missed the bottom. It's done pretty well here of late, and I'm looking for that to sort of explode as an infrastructure play on all this crypto.
Yeah, I have heard about that. I think that's necessary. I think for that to pan out, I think what you're saying is right. The AI aspect of it has to work just because the Bitcoin mining operations is just such low margin. It's just very difficult to fund their operations, which are very capital intensive. They have to sell a lot of Bitcoin all the time. They have to keep selling it. So you're very dependent on the price of Bitcoin at all times, and they can get hit hard by down moves in Bitcoin's price. So if they can diversify away from that and reuse that infrastructure and get like a kind of synergy between the existing capital that they have, then I think that would be very good. So yeah, interesting play.
And securing power. Maybe the compute isn't the issue here, right? I mean, they could, NVIDIA can make 5,000 220 chipsets in 5 days. You can't build a new power plant in 5 days. Even if it's solar or wind, it's a permitting and a acquisition and that kind of process. And I think the securing power to do these things is another important thing that these guys are trying to do well. So it'll be interesting. I'll keep you posted on that.
Sounds
But
good.
shout out to Mike Alfred for turning me on to the miners. And while I'm not picking individual stocks, certainly follow him for some good information.
There you go. Nice. Anything else you have? I don't think I have much else to say.
No, no. So we're going to try and start this back up weekly again, right, Ben? And keep talking about developments when things happen. And I'm excited to be talking again. It's good.
Yeah, I think hopefully we remain bullish in the market, but it's interesting for sure. And I think interesting things are happening again, just with regards to these treasury companies, with regards to integrations with the traditional financial system. And I think it's a good state for crypto to be in. And it feels very positive at this point, which is good.
Agree. Agree. All right, folks. Well, that's all we have today for season 2, episode 1. I hope you enjoyed it. If you have any questions, you can leave them on our crypto Twitter or Internet Capital timeline or wherever else this is posted. And, have a great day.
Sounds good. See you guys.